Well, sticking with banks, it's time now for a Bloomberg QuickTake. We provide context and background on issues of interest. It's a class of securities that's all the rage in Europe. Contingent convertibles, also known as COCO bonds, a cross between a bond and a stock, basically. COCO'S help banks boost capital to meet tougher regulatory requirements. But many investors are skeptical that the extra yield they offer really reflects the dangers. In June, that belief was tested for the first time when regulators wiped out investors in $1.4 billion worth of COCO bonds as part of a rescue of Spain's Banco Popular. Here's the situation. Banco Popular was swallowed by rival Banco Santander to prevent its collapse under a mountain of bad property loans. The muted reaction in the debt market was considered a win for the wonks, since the COCO'S were written off without rattling trading. The most popular form of COCO'S are used to raise additional Tier 1 capital, a lender's first line of defence against financial shocks after equity. Well, while hedge funds are keen buyers of COCO'S, the bonds are also purchased by investors hungry for income in a low-income world. Here's the background. COCO'S allow a bank to suspend interest payments when it runs into trouble, like when its capital ratios breach levels considered dangerous. If a bank's financial health deteriorates further, COCO'S can force losses onto bondholders. The bonds can lose their value entirely or change into equity. Banks rush to sell COCO'S to prepare for the 2019 start of an international agreement known as Basel III. Here's the argument. Regulators noted that investors often did a better job of predicting which banks would buckle in the crisis than they had themselves. COCO bonds are designed to harness this wisdom of the crowd by putting bondholders on the front line. Critics charge, though, that the securities are too complex to be properly understood and too much like equity to be considered bonds. While Banco Popular showed COCO'S can be triggered without creating broader risks, a bigger test will come when a larger global bank imposes losses on its bondholders. You can read more about COCO bonds and all of our quick takes at NI Quick on the Bloomberg.